Hi and welcome back to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Friday, the 24th of January. We're going to look at cable now, sterling dollar. As I said earlier, the dollar had a very bad day yesterday, sharply being sold off, and that is shown in this cable chart where we have seen a strong move in the last few days actually to break out above that 166.03 level. Now that takes cable to a huge new high. I think April 2011 was the last time it was up at this sort of level. And early this morning we had a continuation of this move up towards that $1.6667 level. And the cable chart on the longer term basis still looks very positive. Actually, you would argue all the trends are positive and moving higher. The one concern you might arguably have is this RSI getting up towards that 70 level, coming back a little bit, today, but certainly. That is a positive configuration, but also a little bit stretched as well. So you need to be mindful of running any big long positions for too long, I think, on that basis, because there could be a bit of a consolidation. Moving into the intraday chart, we'll see that this strong move higher that we've seen over the past few days, all these moving averages higher, but as I said just now, you've got this RSI which had been using that 60 level as the basis of support, now looks to be breaking down a little bit, and maybe that is signalling maybe a time for a bit of a correction back towards certainly the first support at 66.03, but 65.54, 65.55 I think is the lows of this trading band here back from a couple of days ago. So I think you need to be looking at maybe that as a first stop off for any sort of a retracement for this cable chart. I mean the momentum indicators remain positive configuration, but arguably a bit coming up to a bit of a corrective move as well. So a bit of a stalling today. I mean, certainly on the back of this these Mark Carney comments that the Bank of England we're gonna. I mean, in terms of the unemployment threshold of 7%, what the market can take from the fact that the unemployment is now back at 7.1, I think the Bank of England is now going to have to reassess how it views its knockouts, and whether the market should not get too far ahead of itself in terms of a potential tightening cycle in the offing. Anyway, so thank you very much for listening. Please make sure you check out the other charts on our morning report website, and I will speak to you soon. Thank you very much.